Hello, everyone, and welcome to a brand new episode of the Indianaut Podcast, where we interview some of India's next best analytical and creative minds who are not only revolutionizing their own field, but at the same time transforming India's entrepreneurial ecosystem one step at a time. Our guests for the day are the co-founders of GrowFix.in. GrowFix is introducing securitized debt instruments to the large retail investor base of India by using innovation and technology. We have with us Ajinkya Kulkarni and Shashank Chimaladari.
So let us jump right into the conversation. I hope you're both settled in. So I just want to start things off with your Indianaut origin story. That is GrowFix's Indianaut origin story. So what was the need you guys saw that led to the rise of this startup?
Yeah, sure. So when back in 2016, I had exited my last startup and I joined Credit Vidya. And I was very clear that, hey, I want to start up again. I want to apply my learnings sometime in future and build something big. And so whatever savings I was making, I started parking the money in my father's business for the reason that I didn't want to learn investing. I didn't want to spend time investing. I was super focused on finding the right idea and the market. And so my father has a small manufacturing business. So he has a bank line of about 12%. So he gave me 11%. For me, it was a sweet deal. Not the best one, but I still said, oh, okay, I've literally zero headache in this and I can withdraw anytime. Right. And I moved on. And there used to be always discussion among friends, say where to invest money, kis mutual fund mein dalna hai, kahan dalna hai, is stock mein dalo, us stock mein dalo. And people used to ask me, what do you do? Where do you invest? I used to tell them, hey, I invest in my father's business, right? I park my money in my father's business, and they used to love it. And I still didn't get into it at that time. Back in mid 2019, I was working with M-Swipe. And at that time, similar discussion happened, and a colleague said, hey, I want to invest money with you. And I said, okay, transfer me the money. And he really transferred money to me immediately using Google Pay. And that was a bit surprising for me. So that got me thinking, hey, what is happening? Till that point in my mind, the kind of investment I was making, it was a suboptimal return, but a decent one. But after this happened, I started talking to a lot of more and more people. And what I understood is people are earning money. So in 2012, you saw a breakdown of real estate. So people stopped buying homes, at least second home and third homes. So people had a lot of money, but they didn't know where to invest. So they started investing heavily in mutual funds. But by late 2018, there was a disillusionment about mutual funds. So therefore, people are looking for different kind of new assets. And India being a very if you look at Indian traditional mindset, it is greed and moderation, right? Investment style. We are not people who will seek risky bets of which gives 40-50% return per year, but we were parking money with jewelers, builders, or a credit cooperative society, tier 2, tier 3 towns, right? So there is this huge need of fixed instruments. FD rates are on decline. Debt mutual funds are not performing well. So this is the gap we are tapping into. So Indians want a really good fixed income products, and they are not any such products on the other side of the table. So that's the idea we are building on.
Okay, that's great. And let us more specifically talk about your launch product, that is GrowFix Gold. So we'd love for you to walk us through exactly how GrowFix Gold works.
Yeah, sure. So what happens is GrowFix Gold is kind of a debt product. So there are a bunch of NBFCs who make gold loans to different kind of borrowers, and we basically buy those portfolios from those NBFCs. When I say buying those portfolios, it means that if they have given, let us say, 10,000 loans, we say, hey, these are 2,000 loans we want to buy. In future, they are going to pay you this much, and the future cash flows will be ours. For that, we are paying you upfront money right now. So that's how it works. And if the borrower doesn't pay, there is sufficient gold for generally for 100 rupee of loan, there is 150 rupees gold. That is physical gold that is available with the NBFC. So if the borrower doesn't pay, the gold is liquidated. So that's how it works. And you basically invest in that pool, and then you can exit it anytime. So that is the basic idea. It is like you are going to fund a gold loan of a retail borrower.
Okay, all right. I want to focus on two aspects over here. The first is, and something you've already mentioned, is that India's love for fixed deposits is historic, because FDs have always offered safety and predictability. But now that, specifically in 2020, given the current pandemic crisis and the economic crisis that has come down on us, the interest rate has moved down so much and the focus on boosting consumption has risen. What opportunities do you see for GrowFix Gold in the current environment?
We generally have discussion with many customers. So FD has a completely different risk profile, right? FD till 5 lakh in a bank is guaranteed by government. So that is a completely zero risk product. All other debt products, whether liquid funds, debt mutual funds, or anything, are not zero risk products, even if the risk is low. So people who are looking this,
I believe everyone's gone through the news cycle in recent times when some news or the other about debt mutual funds has popped up, right? That either some company has historically defaulted and suddenly everyone's net asset values have decreased significantly. And there have been a lot of things in the news cycle regarding this.
Yeah. So, this product is not a replacement for an FD. The risk profile is fundamentally different. It's easy to say so that this is... obviously, the GrowFix Gold has a very low risk.
Absolutely, the risk profile is different, but at the same time, you guys are offering a much significantly higher return as well, right?
Yes.
And I would say,
but I just want to doubly highlight that point of risk, right? Obviously, return is much higher. In my personal opinion, obviously, I might be biased, but the risk component increases by very little, but the return is much higher, right?
Exactly. That's what I'm trying to say. The risk return swap would be quite beneficial over here.
Yes. But this is certainly how I look at it. If I were investing my own money, this is an alternative for a liquid fund or any kind of a debt mutual fund for sure.
Definitely. The second aspect I want to focus on GrowFix Gold is the gold aspect, right? So while I have personally gone through all the glowing reviews your emerging startup has received so far, there must have been some skepticism as well. Given how GrowFix Gold is securitized debt, kind of asset which is actually responsible for the 2008 financial crisis, in fact. How do you address such critics?
Yeah, no, that's a very valid point because it is at the end of the day same structure. Let me explain you why 2008 crisis happened and what RBI did. So what happened, there were these banks who were making those loans and then they were securitizing it. Sorry. And then they were securitizing it, selling it back. Now, the problem is that these banks didn't have any skin in the game. So they were making loan on Friday, selling it on Monday, probably just putting in some pool and selling it off. So if the loan goes bust, bank doesn't lose much money. So you are incentivizing banks to basically make more and more loans. And at some point of time, bank just said, hey, we really don't need to worry what happens to the loan. We will just make a commission on making the loan, a processing fee, a very fat processing fee. And so, and such a system had to go burst at some point of time, and it went very badly, right?
It hit started.
Yeah, it did. Right. And it is so. Then, based on that feedback, what RBI said is that these banks, or in a legal parlance, they're called originators, whoever is basically selling those loans, have to have skin in the game even after selling those loans. So there are two criteria now. One is minimum holding period, wherein a bank or an NBFC cannot securitize a loan till certain period, 1 month, 3 months, whatever. So that there is a loan repayment data available to the investor, and investor take a call.
It's not defaulting from the first day itself. Basically, those loans which are not defaulting from the first day itself.
Yes. And second is there has to be an additional, first 10-15% of the losses have to be taken by the originator.
Okay.
So that is called MRR. It is also called first loss default guarantee. So first 15% of the losses are generally borne by the NBFC or the bank. Now that solves two things. One is investor interest is taken care, and now these banks or NBFCs, whoever is the originator, knows that they will have to bear the losses even after securitization. Right. And that makes them prudent, and that keeps everybody aligned. Everyone has skin in the game. So this is what RBI came up with.
In fact, a lot of fintech startups which are in the lending operations, I believe they utilize the FLDG model quite regularly. First loss default guarantee model.
With the
that
banks.
Is how a lot of a lot of fintechs are right now operating on the same model itself.
Yeah, absolutely. So this is what kind of makes Indian securitization space much safer. And we haven't seen transactions going burst where the NBFC did something nasty and it survived, but the securitization didn't survive. I mean, they tried to sell bad loans. That hasn't happened in India. In US still there is no such restrictions, and there could be another brewing crisis.
Right. All banks which were originally the conspirators behind the 2008 financial crisis are still standing, except one or two. Maybe.
Even the securitization structures, I mean, they can still make some securitize, they can still securitize and have no skin in the game.
Definitely. All right. Okay. While we've covered all of this, the next aspect I want us to focus on is the gold aspect of your product. We are a country of gold hoarders. I mean, I think this fact is known by everyone at this point and stage. And given how gold loans form the underlying asset for your product, how does gold act as a safety measure in GrowFix Gold?
Okay, so let me take this. So basically, Ajinkya has explained what is securitization, how is and right. So the underlying security of our product is the gold, as you mentioned. So when we do this, there are two things that are addressed here. So the first one is whenever someone goes to a gold bank and take a loan outright, they don't get the actual amount of the gold. For example, you take a 1 lakh amount of gold, you won't get 1 lakh amount of rupees from the financer. He would give you, say, around 70% of that money, which is called the LTV, the loan to value ratio. And this is the margin of safety that they keep. And RBI has mandated it to be around 75%. Now, during the moratorium period, they have increased to 90%. So that's the thing. So there's a margin of safety there. So what it does is, let's say the gold prices suddenly crash. Say let's 20% or 30%. Which historically, if you see, it never happens. That's such drastic falls never happen. So because we have an LTV, that is a kind of safety net for this gold price fluctuations, right? The second part is, as you said, we are a country of gold hoarders. That means there is constant demand for gold here. What that does is the gold can be easily liquidated. It can easily be traded in the markets, and then you can get your money out and something like that. So let's say someone defaults on their EMIs regularly. So the bank declares that it's a non-performing asset, and what they do is that they take this gold, they liquidate it, and then distribute the amount to whoever is holding the PTC. PTC is the pass-through certificate. Basically, that is a certificate that tells you that you are the owner of the cash flows, right? So these are the two things. What it does. First, so this is what we envision, right? The first product that we thought we'll do is should be backed by some easily liquidatable security product, and that's why we went with GrowFix Gold.
Okay, all right.
Gold securitization.
Speaking of the moratorium, given how there was recent controversy whether the interest should be charged or not on loans, and now that the moratorium has been extended to a decent stage, and a lot of relief has also been given to SMEs and in the personal retail sector as well. Do you see loan default rates rising in the future because of the moratorium, or do you consider this a safety net that has been guaranteed?
So when obviously default rates are going to go up at least by some points for sure. In gold, it won't. The net NPAs will be still very less because the gold can be liquidated. But even other secured classes, secured classes more or less the gross NPAs are like the people will default, but lender will recover money by liquidating the asset. If you look at unsecured loans, unsecured loans are mainly made to people who don't have any kind of security, and these are most affected by this pandemic also, unfortunately. And so you will see those loans going, those NPAs going very high.
All right. Okay. Also, speaking of the entire pandemic and the economic crisis, in the wake of COVID-19, the stock market has seen a lot of volatility. and this has led to rise in first-time investors as well, hoping to make a quick buck. So, what advice do you have for such new investors?
Yeah. Okay. So this is something that I have seen personally. A lot of friends, colleagues or friends, families, they say, "Ki yaar, I started investing something like this," but the sad part is, they come into this investment space because they heard some friend of friend say, "Ki yaar, I made this 20%. This chance ki will make 20% in just a month or so." Or tips from friend of a friend or something, right? My story. So I am a very, very passive investor, and I've been investing since 5 years, from 2015 or so. So for me personally, these ups and downs actually don't matter a lot. I kind of, play it cold, if you see, right? I kind of ingrained into mind that there will always be ups and downs, but you should not be bothered about it. There will be some day where you see lots of red, you just have to close the tab there. You'll see a lot of green, close the tab. That's it. Okay. So my advice is, whenever you come into financial space, first understand what is that you are getting into. Okay. If someone says here this stock will go up, or you invest in this mutual fund, please understand what is it that at least understand what the stock does, what is it that company, what does the mutual fund, what is the style of mutual fund and all. Also, my personal advice is, if you don't have time to kind of actively look at investment, look at understand analysis and all on day-to-day job, be a passive investor. Start investing in mutual funds. Do your SIPs. Be disciplined. That's what my advice is. Be disciplined. Even if there's ups and downs, don't stop your SIPs. And kind of build a wall around that, while volatility ki ups and downs should not matter to you. That would
absolutely. In fact, during ups and downs, if you continue your SIP, you're actually helping your average price, right? If there's a sudden crash, you're actually helping your average holding price decrease. And while there's a bull run, expecting the bull run to go higher, you're once again investing more and more and getting more skin in the game. So that is definitely sound advice. So GrowFix has 3 co-founders, Ajinkya, Shashank and Abhik. So how did you guys come together, and how did you guys decide that this was the right time to start this company?
Sure. So I and Abhik have been batchmates since our IIT days. We in last startup also Abhik was my co-founder. So when we started working on this idea, Shashu and Abhik, like Shashank and Abhik, used to work together in Shop 109, and Shashank is kind of a investment baba there. Most of the friends, Abhik and his friends, follow Shashank's advice on passive investing, where to invest and how to invest. So we generally discuss this idea with Shashank a couple of times to get his feedback. And then he being Baba, he's one person I know who is a passive investor and who has invested in all kind of assets that are accessible to retail investors. So we used to talk to Shashank to get feedback. He as a user, and he at some point in time he started getting involved, saying, "Hey, kya kar rahe ho? Ye is tarah kar sakte, ye is tarah kar sakte." And eventually that he happened to be a techie, but our main interaction with him used to be because he is going to be our active investor on the platform, and we would want to tap in guys like Shashank to start with. And slowly he started saying, "Hey, you should put like this. I have seen it like this." And then eventually we decided, and he wanted to move to Bangalore anyways. And so we said, "Hey, why don't you consider joining us?" And then it kind of happened kind of very organically.
I think you took customer feedback to an extremely different level.
Yeah.
Your feedback is so valuable to us. Why don't you join the organization as a co-founder only?
I
think that's great. And the second thing I want to ask you is that what are GrowFix's future plans? We've already seen GrowFix Gold, and it is quite an innovative product. What else do you guys have in stock for the future?
So asset wise, we are looking at creating other assets. So we are looking at two-wheeler finance portfolios, commercial vehicle portfolios. What we also got a strong user feedback on, people don't like current tax structures for debt mutual funds, wherein to avail a long-term tax, you would have to wait for 3 years, which is very long, almost impossible. Nobody, at least in our generation, nobody stays invested in debt mutual funds for 3 years. So we are creating a product which after 1 year gives a tax structure of equity. So you will have a long-term equity tax, which is a 10%. And the next one will be obviously we are checking legals and we'll be talking to regulator now to create a product wherein in short term it will be a debt product, but it will be taxed like a short-term equity, which is a 15% tax. So there are many more things on the cards. As we go, we will build more and more things.
That is great. That sounds extremely exciting. I have one last question for you both. What advice do you have for other aspiring Indianauts? Now that we've dubbed you both an Indianaut, what advice do you have for other aspiring Indianauts?
Okay, I'll take that. So, as Ajinkya said, right, we used to meet a lot and then we used to talk about finance and all. Having worked in startup ecosystem for 5-6 years now, I see a lot of blind spots. People say, "Yaar, mujhe startup start karna. This is my idea and all." But the thing that I see is a lot of people don't have, financial literacy, a basic financial literacy, right? How do you manage your salary? Where do you invest? Where do you save? How do you budget and all? Because a lot of people just struggle ki yaar, end of the month, paisa, I don't know where my money is going, right? And they don't start in planning for future also. So this is because what I believe is at the end of the day, even if you're building a tech startup, right, it's a business and business revolves around managing money. You raise capital, you invest it, you make a product, you sell it, you take profits, then you take that money, invest it somewhere else. Everything, it's basically at the crux, it's about managing money. If you kind of don't have the literacy of maintaining your personal finances, it will be very difficult for you when you go at that scale. So my advice is that start learning about managing your personal finances, how to invest, what are different various financial avenues available in India. Let it be FDs, stocks, mutual funds, whatever. Maybe if you don't GrowFix, yeah. So yeah, the idea is that if you are risk averse, right, start with 1,000, 2,000. SIPs allow you to do that, right? Play with it, and then you learn by doing, right? And investment is nothing different. Personal finance, you might read all the books and all, but at the end of the day, if you don't have that personal or practical knowledge, you wouldn't be actually gaining a lot of experience. So that's my advice. Yeah, okay, ye start kar lo.
That's great.
And start as soon as possible. Yeah.
Thank you so much both for joining us today. We wish you both and GrowFix the very best for the future.
Hey, thank you, Gautam, for having us. All the best for Indianauts, and pleasure talking here. Thank you for having us.
Thank you so much, everyone, for joining us today. Thank you. The Indianaut Podcast is available on YouTube, Apple Music, Spotify, and Google Podcasts. Be sure to follow us on Instagram and Facebook to receive all updates on the upcoming episodes. We'll see you in the next one.